Hello friends, welcome to our channel. Today we are going to start with a new learning series, and in this learning series I'm going to cover all the foundational concepts that are essential for you to start your trading journey. Without these concepts, you will not be able to smoothly proceed with your trading journey. So it's important that you do not skip any of the episodes in this learning series and you do not mix the sequence of the videos in this learning series. Watch it step by step. Watch the first video and then the second video. Don't go and skip any of these videos because this will distort your learning. I have designed it in such a way that you will reach to a complete learning by the end of my last video in this learning series. Now, coming back to why am I starting with support and resistance? See, professionally, as a trader, I have been juggling through many setups in the initial years of my trading, and I was getting hooked on to some setups thinking this has a higher win rate and this has much higher win rate. But then at the end of the day, after taking trades over trades, what I understood was unless and until your support and resistance levels are not correct, are not correctly marked, until then your setup is incomplete. And no matter which high probability setup you're using, no matter what strategy you're using, without support and resistance levels, your strategy, your setup is incomplete. Okay, in this video I am going to cover the traditional concepts on what a support and resistance means, and then towards the end of the video I am going to add the points that I have learned through my experience on how to mark support and resistance. Okay, let's get started and I'll meet you in the outro. The most important thing that we all want in the market is to identify major levels of structure and convert them into opportunities for us wherein we can capture these big movements and capture big profits. My aim here is to impart my knowledge of identifying these major levels of structure which I have been using to capture major trends and which have made me profitable. Like we all know, the most basic thing in the markets is support and resistance. This is a level. Support and resistance keep changing their rules. As long as the prices are trading above this level will act as support. Now, the moment the prices break down, the same level would become resistance. Now, I know that this is very basic, but we are starting with the basics just for all of you who are brand new to our channel, and then we will slowly move to the advanced material. Let's go ahead and take a look at some live charts, why support and resistance change rules, and what is the exact psychology that goes behind it, and how we can find out the high probability trading opportunities. Okay. Now, if you see, the prices are slowly moving up in the stock, and from this high the demand slowly begins to decrease. Now this decrease is what we call as a pullback, and then the prices move up again. Why is this happening? Understand this like people who are seeing this market, they are seeing like a sale is going on. Now think of this situation like there's a sale going on. That something which you wanted to buy is now available at discount. So you would want to pick these things at discount, and that is what causes the prices to go up. Now what exactly is happening here? At this high, the sellers are trying to take control. They are not just trying to take control, they are generally trying to sell into the markets. They want to sell and they want to capture a lot of points from here, because as sellers, you make money when the market trends lower and not go above these levels. So what happens when you sell here? The prices slowly come down and further down. The sellers are very excited, but then the prices gradually start moving up. When the market moves up, what happens? These sellers are losing money. When you lose money, what happens? You're scared. When you're scared, what do you want to do? You want to get out of that fear. So what they're going to do is a lot of them are going to decide to exit their sell position at this previous level where they went short trying to sell the market, and that's going to cause the initial buying pressure, because when they exit their position, they have to exit it with a buy trade. Now let's take a look at a bearish version of this. It's very simple concept and it should be pretty easy to understand at this point. We have prices pushing lower and we have buyers who are stepping in to take control. Remember these buyers. These buyers are expecting a price reversal from this low. When that does not happen and the prices continue lower, these buyers are losing money. And since they are losing money, they are in fear. They do not want to lose money. So the way they avoid losing money is get out somewhere around break even. which was the previous level of support. When they see this pullback, this push up, this is a great level for them to say, hey, I realize now that I was wrong about this buy trade, because prices have now closed below this previous swing low. Since I'm wrong, I want to get out of my position right where I brought in, right at break even, and that initially causes these sell orders. And if those sell orders continue, that's what causes a continuation in the trend. Now let's take a look at the bearish version of trend continuation example, and this should be pretty simple for you to understand. At this point, we have the prices pushing lower. We have buyers trying to step in and take control. Remember, these buyers are expecting this to be a price reversal, this reversal to be a price reversal, and the prices to trend higher and higher so that they can make money. But then when that does not happen and the prices continues lower, these buyers are losing money. And since they are losing money, they are in fear. They do not want to lose money, so they want to avoid losing money. And the way they avoid losing money is they get out somewhere near break even, which was the previous level of support, which has now become resistance. When they see this push up, this pullback, this is a great level for them to say that they were wrong buying at those levels. Now that the prices have closed below the previous swing low, they want to get out of the position right where they brought in, right at break even, and that initially causes these sell orders. And if those sell orders continue, that's what causes continuation in a trend. So for a quick recap, when we are looking for bullish trend continuation, we are going to look at the previous levels of resistance, where we are going to wait for the prices to come back at that level and that resistance to become support. Obviously, there's a lot more than this that goes into buying and selling. We will eventually be discussing all the details in this entire learning series. I want everyone to understand this part of the video before we move forward. For a bearish example of this, we are going to be looking at the previous support becoming resistance. So now you guessed it right. So it's exactly at this zone where we're looking at role reversals, support becoming resistance. So that's what we are looking at in terms of the role reversal and the trend continuation side of spotting major levels of structure. So far we discussed on the bullish trend continuation levels and the bearish trend continuation levels. Now let's dive into trend reversal. Trend reversal is also a major structure level that we must be aware about and that we must be looking out for in the charts, because this provides with very high probability trading opportunities. Now say we have something like this, a 1, 2 and 3 move. Now this move has come after this bearish trend. Now we are looking for a resistance trend reversal. Please make note of this point. If you have any doubts or if you feel that we are moving fast, please pause the video, make note of the points and then proceed, or even go back, rewind the video and rewatch whatever we have discussed so far. So let's continue. Now whenever we have this 1, 2, 3 move after a bearish move, I am going to look towards my left and see what is the very next resistance level that the price will continue to hit if it continues in this trend. It is this level that the price will hit if it continues to go higher and higher. If the price continues higher, it will absolutely hit this level. This is going to be the level I mark out for trend reversal at this point in price. Now let's see what happens. The prices hit the resistance level. We have a market pushing higher and higher, and then the prices slowly start trending downwards. Let us take a look at one more example. So if we take a look, we have a bearish trend continuation structure forming up here. Okay, so what will we be marking? We will be marking the previous support becoming resistance, and that level creates an opportunity for a trend continuation. And so from this level, we will be looking for trend continuation. Now, in the similar price structure, if I have to look for trend reversal level, I would not be looking at the previous resistance level as support, but the previous support itself. Please understand here, if you see there's a 1, 2, 3 move. So there's a 1, 2, 3 move over here, and this is the previous level of resistance. Now this is a previous level of resistance. If you're looking for a trend reversal, then you have to look at the previous support zone and not a resistance level becoming support. Okay, for trend reversal, please remember you need to look at the previous support zone for this. This is a very important point. You have to make note that for trend reversal, you will not be looking at previous resistance becoming support but previous support itself. So I will wait till the prices hit the previous support level here, and then I will plan for my trend reversal from these levels, because over a period of years that I have been trading, this method has given me high probability entries compared to taking entries at this level. If you observe, if you wanted to take a trend reversal trade at this level, if you see, if you had bought here, your stop loss would have been hit. Here is where most of the retailers get confused and they start placing their buy orders. Please remember guys, for trend reversal we will always pick up trades from the previous support level and not from the previous resistance level which has now become support. No, because this gives you a high probability move. Now just a quick recap. For trend continuation, our immediate previous resistance level will become support, and that will be our level of structure with high probability for a continuation trade. Whereas for a reversal, once the market has done a 1 2 3 move, we will not be looking at, now say for a bullish reversal, we will not be looking at previous resistance level becoming support. We will be looking at the previous support itself for trade entries. What we discussed so far are just concepts. Based on just the concepts, we cannot go out on trade. After understanding the concepts, now we have to understand how to take an entry, where to place our stop loss, and where to take our targets. That is what will create a full strategy and turn this into a money making opportunity for you. So that's what we are going to dive into right now. Please remember all the conditions that we just discussed. We are just adding one more condition, just one more condition. Okay, please make a note of this guys. The one condition that we have to have as a validation before getting into a trade is this: be it for trend continuation or for trend reversal, we need this validation in order for us to enter the trade. That is the level of structure that we are trying to enter into the market. If it is this, then this level must have been tested multiple times in the past, both as support and as resistance. Now let us test these conditions in live charts, and we will start with trend continuation. Example, we have an up move and then a pullback and then market continuing higher. Our entry point would be that previous resistance becoming support, exactly this place, right? I'll mark a horizontal line there. Now when the prices reach here, the first thing that we need to go back and see is, has this level been tested multiple times in the past, both as support and resistance? If we see here, this level has been tested multiple times as support and this level has been tested as resistance as well. So this satisfies the condition. Now for us to go ahead and make an entry, we will go one time frame lower, and this is a 15 minutes time frame, and we were analyzing at a 30-minute time frame. In 15 minutes time frame, for an entry, once the prices reach these levels, then I will be looking one time frame down, which is 15 minutes time frame, and I would wait for a bullish engulfing candle that closes above the previous candle's high. The definition of a bullish candle, it need not be as big as this it is in this example. It could be a smaller candle as well, but it should close above the previous red candle at that level. That engulfing candle will be our entry, and whichever engulfing candle we will get, we will take an entry once the candle is closed, and we will take a 1:2 reward to risk ratio from this level. So if you observe, this stock has played out in our favor, and we would have made good profits if we had entered at this level with these criterias. So I hope the conditions are clear. We would be doing a recap of all the conditions towards the last, so do not be confused if you have missed out on any points. Okay, let us take an example of trend reversal. First, let us take a look at this trend. There was an up move and a pullback, and then again an up move and a pullback and an up move. Once we have marked this resistance became support for this trend continuation. Okay, now this was acting as support for a very long time. Once we have this down move and we want to take a trend reversal trade, remember guys, what is that one condition that should be satisfied? We will not take trades from those levels where the resistance changed into support. We will go back to support itself and mark our horizontal line there and wait for the prices to touch at those levels and give us an entry criteria. And what is the other condition that we just discussed? That this level has to be tested multiple times as both support and resistance. Let us go back in time and just check it. So here if we see, This level has been tested multiple times as resistance, and then this has also been tested as support. Now this becomes a high probability area because this level has been tested multiple times. So let us go ahead and see how this trade played out if we had taken this trade. So we can see a bullish move is successfully coming up. I am using the same example and same chart so that you could relate to this and you could understand the price movements better. We could use multiple examples as well, but I want you to backtest this in multiple financial charts and see for yourself how this thing is working, because no matter how well I explain any strategy, as long as you don't go ahead and backtest this strategy, you will not have the confidence of executing the trades. Hello friends, I hope this video was useful to you and you were able to learn a lot about support and resistance. Now I have two things before we could conclude. One, if you have any doubts or questions on whatever we discussed, leave it in the comment section and I will respond to it personally. Next, you can rewind this video and watch it again, because I have taken it in a step-by-step manner and I have not skipped anything that's important. Okay. Now, my intention here is that you go to the next episode only when you're clear with the foundational concept of support and resistance, because the episodes coming after this, we are only going to build on this. Okay. So this episode is very important. Please do not skip any part of it. If you have skipped, please go back and rewatch it. And if you like such content, please leave me a like and share it with all your friends so that everyone can benefit out of it. See you in the next video. Bye.